So today, not from payroll. Um, we've had a whole lot of nothing so far this week. Obviously Tuesday, we had a very nice day to the downside. She kind of over exaggerated, as I mentioned, but that's just what happened. Let me delete this just for a second. We traded lower into Wednesday. I did mention that Wednesday and Thursday I was not interested in looking for any opportunities. The only thing I'd be willing to frame is previous day's low and previous day's highs, uh, and vice versa. Now, obviously, that delivered quite nicely yesterday. It's still not something I would have traded, but obviously, we traded down into here, left very, very equal lows, triple lows actually, and then made a run on the previous day's high. We had SMT with ES there, ended up trading lower into this level of liquidity below here. And so that was a nice little setup that we formed yesterday. I think if you were scalping, there was opportunities, and it wasn't necessarily that bad of a day to trade. But obviously opening bell, which is 9:30 right here, from 9:30 into 11:25, which is right there, that pretty much clocked our entire volume for the day, right? So this is our majority movement that we could find that day. And from there on out, it just sort of stayed in a range, right? This is where Asia and London traded. We had the same price action being traded in PM sessions, so it didn't really want to deviate from the middle here. This move was nice though, not bad at all. Now going into today, obviously the big excitement of the week, non-farm payroll. So initially going into today, what I wanted to see is we stay in the range. And non-farm payroll makes the Judas to the downside. And then I would have immediately looked for Tuesday's high to our current daily low, 50% of the weekly range for the market to trade up to into close. Now, non-farm payroll didn't do that. London did, but that works just as well for me. So today's the first day where I sort of have an idea of what where price is likely to trade to and what I'd want to see. And that is, as of now, above these highs and into the weekly equilibrium level. So framing that down to a 5-minute chart, obviously, non-farm payroll opens, trades lower. Not sure if we have an SMT on these lows. Not really. Would have been much cleaner if one of them swept out the lows, but I'm fine with it because this is a low that formed at 5 a.m., right, during London. And so from here on out, I'd be watching to see, do we get some form of move higher, retracement back into this range, and then an expansion up into that weekly range equilibrium level, right? That's my target for today. And I mean, if she's really on ape wire, which I hope she's not, but you never know, we could dig well up into the range above this high here. And I'll be holding maybe a runner in that scenario if I can frame a long setup here. But as of now, I'm looking for the upside. I think that that's the most probable scenario. Want to see this 8 a.m. hourly candle close bullish above this down closed set right here. And then that would give me a framework for a trade lower and then the expansion up. Now, because non-farm payroll wasn't that aggressive in its delivery, right? Like if I just take the news wick or the news candle, you see this right here. It was 200 points, which is a lot, but relative to our entire range, it's not that massive. I'm putting a lot more weight on the later volatility drivers today, meaning the 9:30 open and FOMC member Waller speaking. Didn't know that that was really a big thing, but apparently it packs a bit of a punch. So focusing on those two news drivers, volatility injections into the open. Once again, I'm looking for upside on this Friday's close, right? If we're trading lower all week, I'm never going to be trading Friday lower as well. Equilibrium of the range. For those of you who are interested, you could maybe be targeting, oops, my bad. This right here seems plausible as I draw on liquidity, and then see where we go from there, obviously. So 8:30 up, 9:30, hopefully a retracement, and I'd be looking for 10 to set up the initial move. Now, I would invalidate this idea personally and close my charts if we break out below this low. So if this low right here gets taken out, then I would no longer be interested in trading this day, and I'm just going to have to let it go. there's some ideas of a level of sell side that I marked not too long ago that I don't want to be trading towards because it just doesn't seem right. But this right there, currently not the framework I'm interested in looking for. After the sweep of the lows here and the fact that we're getting an hourly bullish change in state, this low should stay protected. So that is my invalidation level. And I'm essentially going to be trading the trend continuation off of this move that's been set up. And that's pretty much it. I'm guessing you could maybe frame something on the 15-minute, but I'll personally be looking at the 5-minute. Also just now above daily open, so in terms of a daily open to low, high and close, this seems pretty decent. What we can do here is we could probably pull a projection leg, get some reasonable measurements. So 2 to 2.5 up here. I wouldn't want to shoot for the stars that aggressively. Obviously, I'm really just looking for that range EQ, but I'm going to keep that in mind. And this would be insane, right? To move another, what is it? 763 points from here, but that's what 4.5, 4 to 4.5 is on this chart. I only really care about the 2 and 2.5. So upside is the idea. Want to see a strong close here and trade a continuation. Let's see if there's any questions. Kiko gives signal, I wish. Let's see. Stops below hourly are safe, or we should adjust stops on 5-minute. If you can frame a favorable entry, let's say like, let me see, let me pull this up. If you can find an entry somewhere along the lines of this, where you're getting 2R or more, just to range EQ, right? This is really what I want to be focusing on because this is my minimum requirement for this trade. Like at the hourly order block, it's already unfavorable to get the 2R risk reward. But if you can somehow frame a decent risk reward trade where your stop is below the hourly swing low, that's probably the best setup you're going to get. That's going to be your highest confluences and your safest setup. So I would try and see if you can do that. But really what you're trying to do is similar to what I showed yesterday in my annotations. Let me show this. You see how we have this 15-minute confirmation here? Once that confirmation forms, you can just drop lower and follow the trend. So in that same sense, this hourly would be your confirmation, right? I'll mark that out. 1H confirmation. Oops. And then you're gonna be comfortable hopping into a 5-minute. And for instance, I wouldn't take this one personally, but let's say this down close candle right here. We trade lower into this imbalance, close above this down close candle. So a trade could look something like this. This would be into the trend. You'd be putting your stop below that low and then maintaining, looking for the range equilibrium. This is now far more favorable in risk reward terms. I'm not advising to take this candle now, okay? Don't just do that. But I'm saying like generally that's what you would be looking for. On the 3-minute, it looks a lot cleaner. You get a real nice swing formation, 1, 2, 3. So you could do that, stop below that low, and then potentially, let's see what 2R is like. So around there, that would be a potential trade after that hourly confirmation sort of idea. Yeah, let me make this look nice. And I will be trying to trade today if I can get on side with this move. Go back into here. I don't like how we are taking out low resistance quickly before open. I feel like most likely 930 manipulation would just be a fair value gap rebalance. That's sort of what we're looking for. That's really the idea, is that 930 is simply a rebalance to trade higher. And then Waller should really send us through the ceiling in a perfect world. But we'll have to see about that. The thing is that, okay, from let's say this high to that low, this entire range is balanced because we've had efficient price delivery on both sides of the marketplace. We've delivered sell side and buy side efficiently. But really this range on the way down, this massive liquidity void, this has been inefficiently delivered. So if in the case of an upside expansion, this is not going to be like the market's not going to have a hard time cutting through this range into the upside. It's going to find it easy to dig through this and dig beyond it. Whereas working this range down here is just completely unnecessary and it's not likely to do that. So my focus maintains the upside. Like regardless if we take out this low resistance, I mean, we've got previous day's high here, we've got PM session highs, we've got the weekly range equilibrium. Friday should be traded back into the range, right? And then we've got all of this low resistance liquidity in form of imbalances that formed on the way down from our Tuesday expansion, right? Not a lot of resistance on the way down, just straight bleeding, so to say. See this. I hope the hourly close is good. Please explain the hourly confirmation again. The hourly confirmation is the order block creation. So if we create an order block here, like this, then to me that means we swept out the sell side below this low. We had another like set of upset distribution right here. So that's your stop hunt on the hourly. That's added confluence. And then we've closed strong above these down close candles. So this becomes an order block. And if that is the case, then this low right here should not be traded back to, and the order flow should now start trading into the upside. What are we looking for? We just swept out these lows, so we'd be looking for these external highs right here, and the middle or a premium of the previous, well, really our entire weekly range here, which is Tuesday's high down to this low. That puts you at 19,192 for the weekly range equilibrium. That's the idea. What is liquidity void? Just a lack of efficient delivery, I'd say. So like if this would be considered a liquidity void, this set right here. ICT sort of makes it weird in core content, but this is what he defines as a liquidity void. He later on started calling these fair value gaps, I guess. That order block is breaker, right? This is not a breaker, but this right here is. That up close candle right there, or really this wick, is a breaker. So if you're a breaker trader, then this would be your breaker right there, that candle wick. Looks like we're going to close bullish, so we're weapons out to trade this. Pretty stoked. So work on crypto. Yes, I think so. After the confirmation changes state of delivery, should we wait for the price to come to the confirmation area or just trade in opposing candles of it guys close over? Yeah, so I don't need to see us retest the 1 hour change in state. Very likely we're going to see 930, trade lower and get a stop hunt of some sorts. Give us something, some measure of a discount, because that makes the narrative simpler to trade to the upside, right? If the open just expands up, then that's kind of problematic in terms of 10 a.m. open and trying to get in on this trend rather close near the lows. But it does not need to touch this necessarily, right? As soon as this closes above, I'd be jumping into a 3-minute or a 5-minute chart, and then I'd be seeing, okay, for instance, this candle, as an example, I'm not taking this, I wouldn't take this, but for instance, okay, we close above the hourly now. If we close above this candle, I can go long like this, put my stop below that low, look for 2R, so to say. So that's kind of how you would be working around that. You're just going to be looking for the trend continuation after the confirmation, which we now have. Thank God. Finally, decent day. Why do you use wick for the breaker? Because the breaker in essence is it's swing high, swing low, higher high, lower low. And then this right here is your breaker. Now, wherever the bodies form on this bit of price action, like let's say the body is here and then the other bodies are like this would be the body and this is the wick. To me, what matters is the wick to low, because that's your minimum requirement for a breaker retest. So if the market does this, technically the breaker's been retested. It's that motion of hitting that old low where we now broke through that mitigates the breaker. It doesn't need to trade into the body. I think a lot of people, they just pick their preference, but I've always found more success using wicks on breakers. I prefer it by a long shot. Okay. What kind of candle do you want to see in the higher time frame if you want to open for long / short position? I've seen everything higher time frame from this point on. Like right now, everything here is set for me to trade higher. Only thing I want to see is now 930 trade down, create some form of an order block or something for me to trade off of, and then I'd be comfortable holding through the 10 a.m. news. If it invalidates, it invalidates. That's fine by me, whatever. This is a setup that I like, I'm willing to take, but expecting it to expand up into the 0.5 and above this previous day's high level. Mark that out like this. No, I'm not marking your SMT. No worries. Should we wait for 9:30 open, manipulate under, and then look for long? That's what I'll be doing personally. I won't tell you guys what to do, but I want to see 9:30 go down, and then like, let me see if I can draw this out. So 8:30, and then we'll do 9:30, and we'll do 10. Like this. Okay, so if 8:30 expands like this, I want 9:30 retracement and 10 a.m. continuation. So this is 9:30, this is 8:30, and then this is 10. That's what I'm looking for right now. So right here, non-farm payroll expanded up into these highs and created this change in state of delivery. I want 9:30 to trade lower, and then I want us to set the stage for a reversal, and 10 should make the expansion into the upside. That's how I'm conditioning this currently. There we go. We have TGIF today, right? No, we don't. It's not a TGIF framework for today. Twitter model, maybe. No problem with the 11 a.m. speech. We can trade before. Is it 11 or is it 10? I don't want to check this. Let me see. Actually, we'll just open Google. Economic calendar. Okay, it's at 11. Yeah, I think I'll be fine with that. We'll see what the price action's like, but either gonna accelerate me to where I want or it's gonna flop us. Where should be CSD a 50-minute? That's up to you to decide, right? I'm not gonna be framing exactly everything into detail for you. You'll have to figure out where you would set that up. If you'll be putting your risk behind it, essentially. Do you get paid spitting knowledge and spending your personal time like this for us? Maybe try to gather some contribution by the end of every month for voluntary donations. No, I don't get paid, and I don't want voluntary donations. You guys can enjoy this. It's all free. Don't worry about that. This would be considered TGIF, correct? Because we're tracing back to 50% of the weekly range. It's not TGIF. The logic that's being applied here is simply the logic of Tuesday expanded lower, Wednesday and Thursday didn't do much, and now Friday we've set up a framework that is valid to trade back into the range. And so if we're looking back into the range of the weekly candle, then we'd want to look for range equilibrium as a logical target. So it's not in the classic expansion week where you then look for TGIF. It's not that type of a setup. For that, we'd want to see Tuesday, Wednesday, Thursday all rocket lower, and then Friday makes that run up. This is simply trading the logic that we've swept up below the current intra-week lows. We've had a bullish confirmation to the upside. The structure looks clean for longs, and so therefore I'm looking at the previous day's high level and just above it, the range equilibrium of this weekly candle. Hello, Mr. KM. Hello. Weekly profiles expansion? No, it's not. Because the only Tuesday expanded. Wednesday and Thursday just consolidated. There's nothing here, right? This is the expansive candle. We're treating this as a Monday. So technically Monday expanded, Tuesday, Wednesday did nothing. That's sort of how I'm looking at this. What's that? Thank you, CFFEX. Do you think we could retrace lower into the H1 fair value gap? I don't see one. There's none here. Maybe ES. Well, it hasn't formed yet, but I guess it could when the time comes, but I'm not really focused on that sort of stuff. What do you mean, like, retrace down into something over there? I hope not. My God. Inversion fair value gap? Yeah, I don't know. I don't really have a magic ball. It could, it couldn't. Who knows? Who knows, man? In my eyes, it could just leave this naked. It doesn't need to trade back into there because we've just confirmed this to the upside. So it should stay leaning higher, preferably. Okay, yeah, maybe some broker issue where it's like showing the wrong values. Mine is on trading view. So. Is the midnight open important to you for manipulation? I don't really care, but yeah, I guess. Here's your midnight open. You can use it as confluence, but I don't really use it lately. I think if I was a scalper, I'd still be using it more actively. But lately, I don't really rely on the midnight opening as much as I used to. But what you could do that's pretty cool is we can measure our nice little opening range. Clone, put you there. See 168. 168. Oh my god, you're gonna fight me for that, aren't you? There we go. Okay. 930 volatility injection can actually trade into the inversion if we're really bullish. It aligns with mean threshold of the CSDOB. If we're really bullish, we never trade that down. If we're really bullish, we're not going to trade this far down. That's what I'm trying to say. So if we're bullish, I want to even like, if this forms a gap, I want to say it stay open. If we're bullish, right? It should just put in some form of a low, get a stop hunt on a 5 minute or so, and then just set up an expansion to the upside. Cool. I think I'm going to call it there. I pretty much covered everything I have. Good luck today, guys. Don't blow your accounts. But this is the first nice setup that I'm seeing so far this week, or the first nice framework. So I definitely want to be betting on it. Been patient so far. We'll see what happens. No. Do you go for time frame alignment, like 1 hour, 5 minute, 4 hour to 15 minute? Yes. If it's extremely bullish, where would you get in? Somewhere up in the trend. I mean, I'll be stuck on the 5 minute. I'll just be looking for 9:30 to trade first. I'll be getting in after 9:30. I don't really want to get in before. And then find something within the trend to trade up into these highs, and that's 0.5. That's the idea as of now. Thank you. Kiko, you never trade before 9:30? No, not interested. Thank you very much. Okay, cool. I'm gonna call it there. Good luck to